Ladies and gentlemen, by the end of this video, you're going to have a very clear, very concise view about what's going on with Bitcoin exactly in relation to the weekly candle close, which I see is very, very important, in relation to 28.6K and 28K, which is the dividing line, the no man's land in this larger 7-month price range, and also in relation to the recent ETF news and the future ETF news and speculation about that. So quite a bit to get into from a TA perspective and also from a fundamental perspective. Without further ado, guys, let's get into it. Okay guys, before we get into the charts, let's look at the VIP group on Telegram. The VIP group's been very successful recently. We've kept people up to date very well with the recent fake ETF news. We have a group chat in here in VIP. I'll show you quickly. Obviously, people posting charts in the group chat, constantly posting memes, posting profits, having conversations about ETF news, etc. That's one of the components. And then the other component is actually a VIP group channel in itself, which I can't show you. It's exclusive access, which posts trading signals for both swing trades and scalp trades. Check out the VIP information on Telegram. There's a free trial there, and there's also the results that have been released for the last year worth of trading results, 80% win rate. Check that all out. Guys, without further ado, let's dive into the content. Alright, so we're going to start by looking at this range-bound chart like we usually do, but ultimately the main topic of this video is looking at the weekly candle close. And also the massive importance of this specific price zone we're in right now and how we're kind of in between, or what's the word, a rock between a hard place, which means you're kind of stuck in between two scenarios on a very, very short time frame level between 27.9K and 28.6K. It's a very small little zone there we're ranging between, but ultimately focusing on that weekly chart close and also looking into Bitcoin ETF news in relation to a couple more ETFs that have been not declined, but delayed until November and January. And then we've also got some ETF news in regards to Fidelity filing an updated version of their spot ETF, trying to challenge the SEC so they don't get denied. So quite a bit in that regard to look into, but I'm going to keep this video short, under 15 minutes probably, not going to be too long today. That's how I like to keep them recently. So yeah, let's get into it. So basically, we've got this range-bound chart on Bitcoin. Now, I've discussed this many times before. I'm not going to spend too much time discussing it again, but overall, I'll just give you a brief analysis of what it actually is. Essentially, this chart shows you 3 definitive Bitcoin ranges. And actually, you know what we can do? We can go ahead and say, we can just go ahead and make another little triangle, another little rectangle here, and just make another rectangle. I don't know exactly where I put it, but I put it somewhere like this, right? Or somewhere like this. Or just know that above this kind of range here, which is in pink, is kind of the upper range. We'll just make that the entire range over here. That is where we need to get. We need to get into that pink zone. That's where the bulls need to break into, right? So we have color-coded ranges. The bulls need to break into that pink zone. That pink zone is above 32K. And right now, the support for the current zone we're in, the current range we're in, is at about, let me find the pen here, is at about 24.5K. So 32K is the break above zone. We need to get above that to get back into the territory that we saw the vast majority of the 2021-2022 kind of market, which is where we saw the vast majority of the volatility we've seen in recent years. Obviously, that's the bull market zone. So getting above 32K is excellent. That's the target we need to get above. We've rejected from that 2 separate times over the last 7 months. And clearly, the support we're on right now is 24.5K, which we found for support and resistance all the way back from basically August 2022 on multiple occasions. So we're ranging between 24.5K and 32K. We know that by now. Everyone really knows that by now. We need to get above into that pink zone. Once we do, as I said before, not only is that where we saw the bull market, but it's also where we saw high volatility. So we don't have much, planted historical resistance. There's not much ranging that occurred in this price ranging. So get above that kind of pink zone, get above into 32K, and we start to see high volatility. And given the fact that we'll start to see high volatility, and you can assume the price action direction will be upwards from that point, we'll start to see high volatility to the upside. So by that point, by the point we break 32K, we'll see that volatility start to ramp up. Now, it shouldn't be too extreme. We do know the 4-year cycle exists. Let's bring up the 4-year cycle right now. We do know the 4-year cycle exists, and we do know that as per the 4-year cycle, which I'm going to show you right now, we shouldn't really see massive volatility on Bitcoin until after the halving. And the halving over here is at that white line you see on the screen. So that white line, that vertical white line, that's when the halving is going to occur. And the bull market top is going to occur in October 2025. So between this white line and this red line, so between April 2024 and October 2025, that's when we should see the vast majority of the volatility, the vast majority of the upwards price action as per 4-year cycle. Until that white line, right? So between now and April, we realistically can do whatever we want on Bitcoin as long as we don't go below 15K. And so that's why even people who are proponents of the 4-year cycle, even people who are believers in the 4-year cycle have kind of leaned bearish in this period of time. I haven't, but people have, because they understand the fact that we don't really need to see anything good until after the halving. And the halving still is 6 months away. So there is time for Bitcoin to do things that are not ideal, right? There is time for Bitcoin to do things that aren't bullish. But we just need to trust for TA on the short term, medium term, and we kind of don't really have much macro guidance until the halving. Between now and the halving, we're a bit in the dark, because we've only really seen, you have to remember, right? We've only really seen this part of the market cycle on 2 separate occasions. We saw it in 2015, 2016, and we saw it in 2018, 2019. And so this is the 3rd time, and obviously you need 3 data points to make a trend. We're only making the trend now. We don't have an established trend. So our macro guidance for this part in the cycle is very low. Whereas if we look at the last bull market, by that point, right, by 2021, we'd already seen 2 historical bull markets, and now we're going into our 3rd bull market. So we know what the trend is. We have 3 historical bull markets that have occurred and 3 historical bear markets that have occurred. We know what happens in bull markets. We know what happens in bear markets. We know what the trend is. We know what to rely on. We don't really know what the trend is with the kind of intermission period, right, between the bottom and the halving. And that's why we've been in the dark here with the macro for a while. And we're forced to rely on medium-term and short-term price action and short-term TA. And that can get a little bit sketchy, especially, right, when you have the bloody Bitcoin ETFs, all right, complicating the narrative. Because if you look at what's actually happened here for Bitcoin, all right, what have we done? Well, we had the bottom, and immediately from the bottom, we started skyrocketing. We went upwards in like basically what was it, right? From April, between November, it was 5 months, right? We went upwards for 5 months massively. We went up 104% in a 5-month period. And in the last 7 months, we've done absolutely nothing. We've gone sideways. Why have we done that? You need to think of the reason for it. It's not TA. TA is not the reason why we've gone sideways, right? If TA was the reason we went sideways, right, then how can you explain the fact that we saw a double top, which is bearish, and a double bottom in the same range? It doesn't make sense. You don't generally see something like that. The reason why we've gone sideways for so long is because we've had complicating narratives, such as ETFs, right? We've seen, for example, these deadlines constantly approaching with ETF deadlines. We had the first deadline in September, right, for the spot ETF applications. We had the first deadline in September. We had deadlines dating all the way back to June. And you look at September, right? September on Bitcoin was all the way back here in this range, right? It was just over here. So at September, we were testing our second double bottom. If the ETFs, right, were rejected in September, it would have stood to reason that we would have seen a double top formation on Bitcoin, would have gone downwards, and the TA in this range would have looked natural. But instead, they were just delayed. And so the hopes for the ETF, the hope for the ETF application being approved, have been renewed. And so we've seen a renewed sense of buying pressure, a renewed sense of urgency to buy, and a lack of urgency to sell because people are still waiting on the news. The main narrative for Bitcoin right now is ETFs. And, you know, we've seen that by the fact that 2 days ago, we saw a fake ETF approval that was circulating. You might have seen it, right? I did a video on it yesterday. It was circulating all over Twitter, circulating all over YouTube, everywhere for like 15 minutes. There was a fake ETF approval. And in a matter of 5 minutes, I'm being serious, 5 minutes, we skyrocketed from like 28K all the way up to 30K, a 2K, a 7% increase in price in like 5 minutes. And I was live, we were on the VIP group discussing that as it was happening. And that just goes to show, if you can see a 2,000 USD price increase on a fake ETF approval, that wasn't even believed by everyone, in 5 minutes, right, at a pretty dodgy time in terms of how market participants are active, you know, when the real one occurs, you're going to see something massive as well. So that shows you that there really is a massive amount of interest from ETFs. It's the reason we're in this range for so long. It's the reason we've seen this complicating price action for 7 months. And, you know, right now, unfortunately, we've seen the ETFs delayed again. We had more decisions coming out yesterday or earlier today, and they've been delayed again. So the next decisions on ETF is going to be like November, I believe. Let's see this chart here. Yeah, November 21st, and then we've got December, and then January as well. So November 11th, actually, there's one in November 11th. But yeah, at various points in time, and November 10th, there's various points in times we've got these kind of ETF applications being reaching a deadline in which the SEC has to delay them further or approve them. And so there's going to be continued tension until they're either denied, rejected completely, or approved. And that explains why we've seen this price range in such a weird state for so long. But we're going to get into the specifics of this price range in a second on a TA basis, right? Looking into bull market support band, looking into the rejection from the 4-hourly chart RSI, the breakout from this yellow line, looking into where we are right now, right below 28K. What's the importance of 28K? We'll look into all of that after a brief break. I'll be back in a minute. Watch the following advertisement, guys.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have two exchanges for you guys, two options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx, that's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right, with a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
All right, welcome back. Let's get into the nitty gritty of this price range and then we'll end up the video here. The nitty gritty of this price range is interesting, right? I don't like that word, nitty gritty. I don't know why I say it, but the specifics of this price range are interesting, okay? Because we've seen a breakout, obviously, of this yellow descending line. We've moved upwards based on that breakout. We've seen the daily RSI, which has been relatively interesting in the past, breakout of the yellow line as well, which corresponded to the yellow line in the price chart. We've seen upwards momentum based on both of those breakouts, and we've got various lines everywhere, but realistically, it's quite complex. And I want to simplify it by going to a more fresh chart. First of all, I want to state something very, very important. Even during periods of manipulation, like that massive move up as we saw the other day, you see TA play out. Because, as you can see, we rejected from the same horizontal 4-hour RSI line that we rejected from on 2 previous occasions. So that's very important to note. That's a side note. And I just want people to know that. Even during periods of manipulation, TA plays out. Therefore, you should trust TA in every realm of possibility in market environments. TA is always important, but that's a separate note. Now, this is a simplified chart. It's 4-hourly chart. There's nothing on the screen right now. I want to go and I want to look at the daily on this chart, all right, and I want to bring up the volume profile. This is what I've done in quite a few, like 3 or 4 videos in the past. I think it's the best way to look at this range because overall, what do you have in this range? Well, you have the 32K resistance, okay, which we spoke about before. 32K resistance will make it pink, and you have the 24.5K support, which will make it pink, right? Those are the defining levels of this price range, the pink lines. That's the top and the bottom of this price range that we've seen for the last 7 months. We then have, okay, the volume profile showing us that there's actually another level. Okay, there's a level at 28K, right? As per the POC and the volume profile, which is the point of control, the place in which we've seen the most historical trading volume occur within this price range. That is the dividing line within this price range. And then there's also 28.6K, right? Which is another kind of dividing line, right? So this is the kind of support we saw on this leg upwards here, resistance we're seeing right now. And so you can see that the POC, sorry, I keep clicking the wrong button, between the POC at 28K and 28.6K, which is another important visual identified resistance zone, we can make kind of our unique red zone within this price range. So let's delete all these lines, let's delete the volume profile, let's delete everything. What we have is the 2 defining pink lines, which define the top and bottom of the entire price range, and then the red box, which defines kind of the middle zone, the no man's land of this price range. We're currently below the resistance, okay, needed to break back into the upper part of this price range. If we get above that resistance, we can start attacking 32K, and if we start attacking 32K again, it becomes very unlikely that 32K will hold for resistance because we've already tested it twice in the past, and if you've looked at the market for any period of time, you understand that triple tops are very, very unlikely. So what I'm saying to you is this. I'm saying to you very clearly that if Bitcoin manages to definitively, right, not randomly get above for a day, definitively get above 28.6K, it becomes very likely that 32K will break to the upside, and it becomes very likely that Bitcoin will enter a more bullish market in which it re-enters kind of this bull market zone it saw before and re-enters a period of higher volatility and more bullish price action. So right now we are literally on the doorstep of glory. And it sounds dramatic to say it like that, but we really are. We're on the doorstep of glory. We need to break above 28.6K. And if we want to look at it from a different perspective, okay, because that's actually a very, very good chart to look at, right? If we want to look at it from a different perspective, we can look at it from the weekly chart perspective. The bull market support band is also very important. The bull market support band is something that we've held for resistance and support multiple times in the past. Of course, it's been basically one of the most important indicators in Bitcoin's entire price history. You've probably seen it so many times by now. And for that reason, I'm not going to show you the history of it, but basically in uptrends on a macro scale, you hold it for support. In downtrends on a macro scale, you hold it for resistance. Very simple. Right now, we've seen in the last 2 or 3 months, we've tested it 1, 2, 3, right? 3 separate times, and we've held it for support. We held it for support. We dropped down below it. We got above it after holding for support. We bounced off of it. We bounced off it over here. When we finally got above it, that's when we see the massive gains of the start of this kind of mid-cycle run. We saw it held for resistance throughout the entirety of the bear market with one fake out. The fact of the matter is, it's been very, very important historically, and right now, after a strong rejection, right, after an evening star candlestick formation rejection, just the last week or so, we've managed to actually edge above it. Right now, we're pending. We're on a pending close. We're above the bull market support band. If Bitcoin manages to close this weekly candle in 4 days and 23 hours, right, in 5 days, above bull market support band, that would be a massive step in the right direction. Not only because it would be a close above bull market support band, but also because it would be invalidating this bearish candlestick formation we saw last week, and also because it would lead to a breakout above the weekly chart RSI descending wedge formation. It would lead to a confirmed breakout above that. And so if Bitcoin, hence, manages to do one of the following things, we're in good territory. I'm going to list them out to you. If Bitcoin either closes above bull market support band this week, or gets a couple of daily candle closes above 28.6K, Bitcoin becomes quite bullish. That's what I'll end it there. I'll end the video there on that analysis. Sorry for making stuttering a little bit during this video. It's been a bit of a rough couple nights sleep-wise. I've been following the market quite closely, especially with that ETF, fake ETF approval just the other night. That was at like 3 a.m. in Australia, so it was pretty rough there. Haven't really got back on track with the sleeping schedule yet, but I hope you guys appreciate the analysis. I hope I made it very clear to you. Weekly candle close is very important. Also, getting above 28.6K is very important. Lots to look at in the future with Bitcoin over the next few days. Guys, before we end the video, go ahead and check out the Crypto Academy's Become a Trader course. You can find the website in the description below. 10-unit course. All the information about it is on the website. You can read up about it, including the unit topics and what you get specifically in terms of videos, worksheets, slides, the number of them, the time it takes to complete the course, how many students we have, and the email addresses there as well. So to clarify, VIP group, we discussed in the start of the video. We do altcoin trading signals. We've got a couple of exchanges that I have referral links for if you're interested in getting on a good exchange. And then we've got the Crypto Academy if you want to learn how to trade. Thanks for watching, guys. Cheers.